For a growing business, knowing everything I know from over a decade of dealing with the IRS, here are the top 3 tax moves that I would make. When you're just starting a business, tax is very often not the focus, since you're focused on creating a profit. But businesses who do not level up their tax moves to match their business growth feel the consequences later. And if you don't know me, I'm Jasmine DiLucci. I'm a tax attorney, CPA, and enrolled agent. My day-to-day is actually running my CPA firm and my tax law firm, but I started posting on social media and created a free tax law community after a decade of practicing tax, because real tax help with actual tax law should be available to everyone. The first tax move that I would make is to understand the high-level impact of tax and accounting for my business. If you talk to business owners who are further ahead and not dealing with IRS issues, there's a pattern, okay? They don't say, I have no idea what's going on with my books, and they don't say my financials and tax return aren't important. What they do say is, I know enough to be dangerous, or I keep a pulse on my financials. That doesn't mean that they're doing their own books or filing their own tax returns. It means they understand what's happening in their business financially, where the money's coming from, where it's going, and what the tax impact looks like. And that matters because tax is often your single largest expense, and unlike other expenses, it provides zero value if you're overpaying or not planning around it. One of the most important skills of any business owner is resource allocation, okay? Deciding where to spend your time, money, and attention. But if you don't understand your numbers or return and are over allocating resources to paying the IRS, you're not in the best spot. Okay, the business owners I see succeed the most are the ones who take the time to learn enough to know when they're not on track, not to become an accountant, okay, but to make informed decisions. The second move is to clean up the bad tax and accounting habits that do not scale, okay? If you've been in business for any amount of time, you've probably had a few systems or maybe a lack of systems that helped you get by when you were small. But let me be clear, okay? Those habits will not grow with you. They don't just stop working, they break, and when they break, they cost you money, time, and very often an IRS letter. And I've heard it all, okay? People will say, Jasmine, my workers only take cash and they refuse to provide identifying information. I'm sure the IRS will understand. Or Jasmine, I can't tell my mom that I don't want her doing my taxes on TurboTax. It'll hurt her feelings. And look, it is your business and your decision. But in my experience, business owners who stay small or get in trouble with the IRS tend to avoid these tough decisions, and business owners who grow the most handle the problems before they become disasters. So here's what I do to clean up bad tax and accounting habits, okay? Step 1, review your current setup. Are you actually in compliance, or are you just assuming everything's fine because you haven't gotten a notice yet, okay? Do you even have enough information or knowledge to know if you're in compliance? Step 2 is to fix what could blow up big time, okay? The stuff that was fine at $80,000 in revenue is usually not fine at $800,000 in revenue. A good example, worker classification, okay? If you have contractors that should really be employees and the IRS reclassifies them, you don't just owe the difference, okay? You would owe employer-side payroll taxes, employee-side payroll taxes that should have come out of your employee's pay, and the federal income tax that should have been withheld. So if it wasn't bad enough that you have to pay your income taxes, you are now paying the income tax of the people you hired. It's a brutal hit, and it comes with personal liability even if you shut down your business, okay? So let's go through an example. I had a client who went through a payroll tax audit because he delegated the health insurance plan choice to his employee. His employee chose a health insurance scam that basically gave employee funds for health costs without payroll tax, which of course they were not actually used on health costs, making it actually just taxable wages given to employees. The IRS took down the promoter of the health insurance scheme, then found the businesses who signed up for that scheme. The client was responsible for the employer-side payroll tax, the employee-side payroll tax, and the federal income tax for the employees. And while we did get the bill down by over 50% of the IRS's original proposed assessment, it was very stressful for him, and it was not easy, and of course it was not cheap. And then step 3 is to get consistent, clean financials and tax returns. All right, finally, the third tax move is focus on scalable tax strategies, okay? As your business grows, so does the value of your time, energy, and focus. And one of the biggest mistakes that I see business owners doing is chasing every inconsistent tax idea out there without asking whether it is worth the effort or risk at their stage. Some strategies might save you $5,000 but cost you $15,000 worth of your time, administrative fees, stress, or cleanup when the IRS sends you a letter 2 years later. Others are so complex or risky that they only work if you fly under the radar, which, let's be honest, that is not really a tax strategy, and some of those illegal strategies can come along with a nice 75% civil fraud penalty. And yes, that means that if you do a strategy that saves you $200,000, then the IRS could propose a penalty of $150,000 in addition to the tax of $200,000, in addition to the regular penalties and interest that would have already accrued. Instead, you need to ask, does this strategy grow with me? Okay, does this plan protect me and my growing business as I begin to have a higher risk of audit with bigger consequences as a larger business, okay? When you're growing, your tax plan should evolve from a patchwork of tricks into a cohesive long-term strategy that supports your vision and protects your time. So if I were going from a startup to a growing business, I would first understand the high-level impact of tax and accounting for my business. Second is clean up any bad tax and accounting habits. And third is to focus on scalable tax strategies. Growing your business isn't about doing what a marketer claims the rich do as if they have a clue. It's about doing what the best business owners actually do, which is proactively protect their time, money, and energy. And if you want more of this kind of advice from someone who's a tax attorney and CPA and not just a marketer with a tax content script writer, join my free actual tax law community where I do live workshops, Q&A, and walk through real tax situations. And as always, for more actual tax law from a tax attorney, subscribe.